Hey, this is Danielle, and today I wanted to talk about upcoming earnings because, as you most likely know, Netflix is going to be reporting earnings tomorrow. And last quarter, they completely tanked to the tune of 21%, after which they continued falling for another 3 days before finally bottoming out, trading slightly higher, recovering a little bit of that gap, but then they continue to fall almost the entire quarter until they've hit resistance and fell yet again. So, for my pre-earnings trades on this one, I've already traded it, I shorted it, I was targeting 350, then after that I was targeting 335. Those targets have both been met. At this point, now we have earnings to deal with. So, this company is going to be reporting tomorrow after the close, and I'm going to note a couple different factoids here. Number one, the past 4 quarters, they have traded lower despite the fact that they've actually beat earnings 3 out of 4 times. So, I mean, it's really not a good look when a company is beating and still falling. I mean, it's just one of those things where it's kind of like, well, sorry guys, that is not good enough. So that's not a good sign. Another vote to the bearish side here is the fact that this stock has been cut in half. It's traded from $700 to $337. What that means is that there's definitely a lot of people who bought, up in here who are losing money. They're in the red. And, if there's another disappointment, they're probably going to want to cut their losses, which would increase selling. Now, I think probably the most important factor here is going to be the expected move, actually. And this occurs when a stock is right on recent lows, like key and pivotal low like this, and their expected move would actually bring them below the key area of support. The reason why it's so important is because these kind of lows, are put in their support zones, right? But the fact of the matter is that earnings is a catalyst, and earnings causes the stock to move. And so when you're looking at how it could move in a normal way, the market makers are pricing in a $33 move. So if it moves $33 to the downside, that's a new low. If it moves $33 to the upside, that's a rally directly into resistance. So when I'm looking at this stock, I mean, it makes no sense to me to try to trade it to the long side. If you really want to, if you want to be counter trend, I mean, hey, don't let me stop you. But keep in mind this key resistance right here. And I think it would actually be easier to wait until earnings is over with if you really wanted to, see if it could make this price point. Because I don't think that betting on it making that price point is going to be a high probability bet. But I do think that, if it did make it after the fact, you could short it, if that makes sense. I think it's going to be a higher probability bet that, it either moves within the expected range or it trades lower, with my favorite choice being a lower trade. The problem with that is, okay, what are you going to target? Because I mean, you can definitely target 300. I mean, that's a nice, sticky key psychological value. But that would assume it doesn't move more than what's expected. If there's another big surprise, a bad one, I mean, it could end up, $60 lower. It would bring you all the way down to 275. So for this one, moral of the story, people have been asking me if I want to do something neutral on this stock because the implied volatility is so high. When you look at the implied volatility, it is extremely high. It's the highest it's been all quarter. It's the highest it's been over the course of a year. So that means the options are expensive. But the problem is, with an expected move this big, it's really hard to get a good risk to reward ratio, because even if you sell the 335s, you're going to have to make your wings all the way out here. And maybe not that far, at least to here, at least to here. That's going to be a big trade with a lot of risk. So I just personally don't want to do that, especially in light of what happened last quarter. I think it makes the most sense to just sell some call credit spreads, or my favorite option, which is just wait until after earnings and go along with the trend then. Then you don't have the overnight risk. The next one that I want to talk about is Tesla. I love Tesla. I'm a Tesla bull. However, Tesla's been in the news left and right, along with Elon Musk. And I just don't think that there's going to be too much else left to announce. I think that they're sitting right around a key psychological price point. I think that the last 4 quarters, I mean, it's barely moved despite having a massive market maker expected move. So this one actually strikes me as a great spot to make a neutral bet because, you know, Tesla doesn't normally move that much on earnings, yet they're pricing in a $50 move. It's at a key area of support. So this is a good time that you can come in and sell some, you know, at the money spreads. You could sell a call credit spread and a put credit spread, make it an iron fly, iron condor, and then basically you'd be selling the premium at the money with the idea that you'd buy it back the next day because the volatility goes higher, higher, higher into earnings, and then the volatility gets crushed, meaning you can usually sell options here and buy them back the next day. Granted, stock can't move a lot, okay? If the stock does move too much, that's where you lose money. But because of the stats on this one, I do think it's a pretty good shot. Anyway, that's all I have for you tonight. But if you want to learn more, you can check out my Twitter feed. Go to Twitter and go to @TraderDanielle. Watch out for the fakers. There's a lot of them. But, you know, you just spell my name like this, @Trader, and then Danielle, DANIELLE. Anyways, I hope you have a great rest of your Monday. Let me know if you trade any of these tickers on earnings, and I will see you next time.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.